Thanks for the opportunity for us to join this session and the conference this week. I'm Nicole Lefore. I'm the director of the Feed the Future Innovation Lab for Small-Scale Irrigation, and I'm presenting on behalf of a team of colleagues at the International Water Management Institute, Tai T Min, Liki Ngusi, and Abhinav Fosu. And we've been doing research on asset finance, and we'll be presenting on innovating asset finance inclusion. So the literature is fairly strong on lack of credit as a primary constraint for smallholder women farmers to be able to adapt to climate change, expand production, increase income, invest in labor-saving technologies, among other investments in agricultural value chains. A number of these constraints are fairly well documented. The constraints to be able to access loans, because women often lack bank accounts, documented collateral, land holdings, etc. There's also intra-household dynamics that discourage credit-based investment for women. Banks and input suppliers often don't target women farmers. And also the types of investments, or really the size of investments that are needed for many of these assets, is beyond the threshold of lending for many cooperatives, VSLAs, and MFIs. So there are a number of new solutions that are being offered up as a way to enable women to overcome the constraints of access to credit. So our research really asks, does asset-based finance enable access to non-collateral credit for women farmers and value chain actors for productive assets? Essentially saying that, are these new tools, which don't require collateral, enabling more women to actually access credit? Our case study is on small-scale solar irrigation pumps, which are often an asset-based finance. Why solar irrigation pumps? They're considered climate smart, they're considered climate adaptation, they're labor saving, and we know from cost benefit assessments that they're profitable if you have access to the credit to be able to invest up front. Solar irrigation pump companies are also expanding into these frontier markets predominantly in sub-Saharan Africa, but also in Southeast Asia and Latin America. And companies often use new tools and instruments. The solar pumps are often bundled with asset-based finance. They usually use mobile money platforms for payments. Some offer pay-as-you-go options, and most of them offer extended warranties with after-sales services and farmer training. The study methods for this research, the first was a literature review, looking really at the literature to understand what factors increase women's creditworthiness. So we're really focusing on what enhances women's repayment of credit rather than on the constraints to access. And then we looked at the tools that are available that are being promoted as solutions to women's credit constraints. And then the third part is action research, which is still ongoing, in which we're studying the responses of women and men farmers to these types of finance tools and instruments in collaboration with private sector partners in the solar pump industry. So while the action research is still ongoing, we wanted to share interim results now so that we could start getting feedback. So through the literature review, we identified the primary criteria that are indicators of women's financial management capacity. So really these are the criteria, or these are the factors that are considered positive in women's ability to repay. Participation in organizations and social networks broadly, experience with savings and loans, financial literacy, which often goes with participation in savings and loans organizations, non-farm income, which is often actually excluded from loan criteria, diversified farm income. Women often invest in more than one crop and often include livestock as well where they can. And access to other forms of credit to pay for complementary inputs. There are more factors that are identified in the literature, but these are the primary factors that are often highlighted across research studies. So the second part of our study was looking at the tools that exist. The first tool we looked at was a credit scorecard tool. And the credit scorecard tool is very important to the companies because it enables them to manage risk. In this case, these are not financial institutions that are offering asset-based finance or solar pumps on credit. So they have to have a lot of equity to be able to provide the equipment on credit and to be repaid over a number of years. So the credit scorecard is something that they rely on to manage their risk. And when we looked at these scorecards, what we found is that the key criteria being analyzed are the collateral, the savings, the land holdings, profit and loss history, existing documentation, and especially for on-farm income. So really, these are very similar criteria to what a bank uses, and we know that these are the same criteria that have often excluded women from access to loans. So we're really missing many of the criteria that would measure whether or not women are creditworthy. And the other thing is that the credit reviews are designed for individuals and not groups, whereas in some cases, not all, but in some cases, women would like to be able to borrow as a group. So there's still some gaps in the credit scorecard tool. So the second tool we looked at is the asset-based finance instruments themselves. So this is essentially offering a solar pump on credit in which the client provides 25% down payment. It varies by company, but 25% is common. Uniform monthly payments of the balance for 1 to 3 years. A warranty with regular after-sales service and farmer training on how to use and maintain the pumps. And our observations from the field so far in terms of applying this finance instrument is that regardless of being male or female, most farmers lack documents for farm costs and revenue. Also, most farmers cannot manage the full 25% down payment, and uniform monthly payments generally do not work for most farmers. We also noted that women purchase pumps for multiple purposes. So in addition to a particular crop, they may have multiple crops on a particular plot. They use it for livestock, and they'll use it for preparing foods for market and also preparing foods for the household and household water use. And these are not things that are considered by the finance instrument. The action research we're doing is really working with solar pump companies that are applying these two tools and working with them to try to understand how well these tools are enabling them to reach different market segments, particularly women. And what we're finding is that the off-the-shelf financial tools and instruments tend to exclude women. As noted above, the criteria that are used for considering whether or not someone qualifies for asset-based finance resembles in many ways standard loan criteria. This also excludes many men farmers as well. We worked with the companies to adapt the tools and instruments to be more responsive to the way that women manage finances. And the companies are now applying these new criteria, and they're collecting data for both the additional criteria that is more gender sensitive and the standard scorecard criteria, so that we're able to compare whether or not the additional criteria give women more access than the standard criteria. And the other thing that most of the companies are now doing is that in any case a woman applies, if she's rejected by the standard scorecard, the application is reviewed and reconsidered by a credit committee and considered from a more qualitative perspective. And in terms of the second tool, the companies in some cases are adjusting the down payment to be less than 25%. They allow more flexibility in terms of monthly and seasonal payments combined. And some of the companies are also working with other partner companies and able to bundle inputs for irrigated production under the same financial instrument. So the companies are really innovating as we are implementing the action research to be able to reach more women and men farmers both. I'll summarize some of the points I've already made, which is essentially that this non-collateral credit product, both the scorecard and the asset-based finance don't necessarily overcome the main constraints that have limited women's access to credit. These financial instruments often exclude gender responsive or gender sensitive criteria. And so what we're doing as an alternative is we work both with our direct partners and with more companies through multi-stakeholder dialogue platforms, raising awareness of these companies about women as a market segment, building confidence in women's ability to manage finance, and working with them to adapt their marketing and finance approaches. For example, changing how information is shared, adapting the finance tools, and looking at additional criteria that would enable more women to access the financial products. And the most innovative companies are adapting their marketing and financial approaches to expand their client bases to include women. In some cases, going very qualitative in terms of the criteria that they're using to assess creditworthiness, and also including women as local sales agents in some of the communities and districts where they're working. I'll stop here and look forward to our discussions and all of the feedback. Thank you.